I think starting with day trading just increases your chances of blowing your account out way faster.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about personality types and which personality types should avoid short-term trading or day trading or scalping or whatever you want to call it. What do you think?
Okay, first of all, everybody, no, so I think we're all kind of, if you think about in a broad sense, we're all kind of built to not do well. Just trading the markets full stop. I mean, have to be a weird individual to be built, I think, to trade well, like out of the gate, right? Mm-hmm. And that's just because of our cognitive biases and the way that we operate in the world. But for your question, it's a very good question. I think it's impulse control. So if you look at, you can take a personality test. There's several of them out there, like the Big Five, or there's the Gardner's one where he has like different domains, like there's like interpersonal intelligence, athletic intelligence, like body. There's like mathematical and verbal, and there's all these different ways of looking at intelligence. But the one, if you can find a test has impulsiveness, that's what I would go with. I know there's a lot of talk among the people. I think it's called the 16PF. It's either no, it's not the 16PF. 16PF will have impulsiveness in it. So that's one you can take. And we can put a link in the show notes, but you can just search online for 16PF free personality test. And I think the Myers-Briggs is the one where it has like the four letters. Is that right? I believe that's the one. And there's some talk like INTJ is meant to be the best for traders. So there's a lot of talk about that, right? But your question is who should avoid it? And I would say if you take like a 16PF or any personality test that has an impulsive scale on it, or even just an impulsiveness scale, that would be good too. You could find that as well. If you're high in impulsiveness, then you're really, you really need to fight against that, because day trading. Our friend Adam actually talks about this, I think, at the London conference. Like he was talking about how, my argument has always been start with the higher time frames and then maybe lower, go down as you get more experience as a trader. Mm-hmm. And it happens in slow motion, right? That's one of the advantages of trading. Like right now, I've got like 15 or 16 trades on the daily charts. Okay, and so it really does happen in slow motion. Like one day you'll be down 50 pips, the next day you're up 100, and you know what I mean? And like the targets are so far away, there's no telling what's going to happen. Like literally last night I went to sleep when it was before the New York Open, right? And I'm testing some stuff on two different accounts, and one account was basically break even, slightly down, and the other one was way up, right? But the trades hadn't cashed out because they're daily targets, right? And then I come back this morning, and the one that was way up was up still, but about half what it was when I went to bed. Mm-hmm. And then the one that was break even is now down. You know what I mean? It's like, and this is the kind of thing you go through with daily charts, because it's always such a slow motion thing. Whereas when you're scalping, it happens really quick. And you get, like Adam says, the advantage of that is you get almost instant feedback, near instant feedback on your performance, right? On how well you did with that trade. The disadvantage of that is that you can go after like revenge trading, and you start thinking, oh, I've lost 2 trades. Now I really got to go in hard on my third trade, or, and that's the impulsive mind, right? That's the kind of trader who would do poorly with near instant feedback on your trades. So that's what I would recommend. I would recommend finding out where you are on the impulsiveness scale. And if you're high on impulsiveness, I would either don't trade or really work on patience and, putting yourself through certain hoops like back testing and a checklist on your trades, and probably even trading the higher time frames. That's my opinion. What do you think? What are your thoughts?
Yeah, I mean, in talking to traders and working with traders over the years, I mean, I think that's the best advice. You just start on the higher time frames. And I think actually a very, very small percentage of traders are actually built or could, mold themselves into a short-term trader. I think That's a very small percentage of people. And I think a lot of people will do much better on the, like you said, daily or the 4 hour or even longer time frames. You know, it's like if you're like an investor or whatever. And I think that day trading really does get to that part of us that flips the switch on like revenge trading and over trading and trying to get back at the market. And I think very few people are able to put that, get that under control. So yeah, I would agree. Just start on the higher time frames, and then those concepts will filter down if you want to do day trading. But I think starting with day trading just increases your chances of blowing your account out way faster.
Yeah. You know, and it's an interesting point that you said about investing being, like you're saying, even a higher time frame, like if you think of investing. And that's actually a really interesting way to look at it. Like if you look at investing is almost like really high time frame trading, right?
Mm-hmm.
In that sense, I think that's a really good way to look at it. I mean, in that sense, what you're saying is that I am not married to this position doing well immediately, right? So it's kind of like the same on the daily time frame, but maybe on the monthly or something or whatever, right? So if you're investing, and I actually that's a good way to look at it. Like I've been recently, with the way that the markets are right now, I feel like I'm missing an opportunity, you know, if I don't start looking at depressed assets right now, like ones that I think are going to do well in 10 years or long, like a higher, you know, like a longer term goal. And so, yeah, so I'm it's kind of what I'm doing, isn't it? Like I'm looking at, and that's what you'd be doing as a long-term investor, is you'd be looking at this idea of, okay, what's really cheap now? What's sort of almost like too cheap? And is that going to last like 10 years out from now? Like 10 years from now, am I going to look back and go, wow, I really should have bought this, you know? And you never really know for sure, because this kind of gets into fundamentals and stuff like that. And people can, you know, everyone has an opinion when it comes to this sort of stuff. But I do think that what you're saying is true. Like if you think about, like if you're a daily chart trader, just stretch that out to like monthly or something. And that's kind of what investing is. Like, so for example, if I'm a daily chart trader, I want to give my trade, like say I take a trade today, and I want to give my trade at least 2 days before I can like reassess. So 2 more daily candles before I kind of reassess what's going on with the with this trade, in, you know, this individual trade. And if you think about, like, as an investor, you know, you might be looking at 2 months, right? You might be taking the trade this month, and then 2 months from now you can come back and reassess and go, okay, you know, how am I doing here? You know, that sort of thing. I think it's a really, and the other good thing about the longer term goals, which are inherent in investing, is there's less pressure. You know, think about trading the 1 minute chart. That's like max pressure versus investing. It's such low pressure. I mean, that's why like these guys like Warren Buffett and Charlie Munger, you know, they can do this for so long because, I mean, really all they're trying to do is identify where the market's obviously wrong, right? Like they're wrong about this asset, so we're going to buy it, and then the market will later figure it out, and then at that stage we'll have some profits, right? Like that's really all they're doing in a broad sense, I would say. I mean, it's oversimplification, but that's really kind of what they're doing. You know, I know they look at balance sheets and all that stuff, but it's really interesting that you say that, because I think that that's a really good way for traders to look at investing, is sort of like higher time frame trading, you know? Yeah.
And that brings up a good point too, that some people are kind of just built to see the value on a certain time frame, right? Like, so I know this one guy is really good at scalping, but so he's really good at seeing that, okay, this is a good opportunity within the next 2 seconds or whatever. He takes it and then he's out. Whereas a person who has a longer term view would be able to see the value 10 years down the line. Oh, this company is going to do well 10 years down the line. And like I in the last downturn, I bought like Citibank, right, at $1, but I didn't have that long term time frame. So I sold it quickly and I made, you know, whatever, 300%. But had I kept it, I don't know what it's at right now, but it split several times along the way. And I didn't have that long-term view of it. And if I had that long-term view, I would have made way more money. So I think that it really is all about, number one, like check what time frame makes sense to you and where you can see value. And number two, can you expand that scope and maybe go longer, go shorter? And, you know, a lot of people won't be good all of it, but maybe you have one or two timeframes that are good for you. So I think it really is about the perspective and like how you see time.
Yeah, definitely. I agree. I mean, you like our friend Colin, his best trade ever was when he took a trade at the beginning of the summer and he forgot about it. And then he came back. I'll never forget that story when he told me that. He's like, yeah, I had a pretty good summer, you know. He's a but because he wasn't trading, right? So he's like he wasn't really looking at the charts. And then he came back like in September. He's like, oh, I forgot about that trade, and it was like massive profit. You know, it's so funny. And I heard about this guy, or I think I saw a video of this guy talking about how he bought Netflix at $5, right?
Mhm.
And I think it's, I don't know what it is, $500 an hour or something like that, $400. And then he said, like a couple of weeks later, he sold it at $4 to book his tax loss. So he wanted a loss so he could write off his taxes, and he never bought back in. So now it's like at $500, and he's like, well, got my tax loss, don't have any profit, So it's funny, but like, it's just the patience is so useful, isn't it? I mean,
Yeah.
And I mean, that's what Buffett said, right? Warren Buffett said the markets are an instrument for removing money from the impatient and giving it to the patient, or something like that.
Yeah.
So I'm paraphrasing, but yeah, it's so true though. It is so true. And on every time frame, like you can be patient as a 1 minute trader or 1 minute chart trader. You can be patient. You can have you have a target, you get out, but you hold on to a percentage, like a half of that position, and you trail it, and you see, that one, 5 pip profit on the first half of the position, and then you have another 25 pip profit on the remaining part. That's by being patient and not taking profits in 3 minutes, but having to wait 35 minutes for it to unfold and for your trailing exit to kick you out at 25 pips. That's the kind of thing that we're talking about here. It doesn't really, it applies to all different types of trading, whether it's investing or 1 minute trading or whatever. Yeah, but it's so true. Yeah.
Yeah, totally. All right, cool. Thanks, Walter.
Okay. See you.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.